Okay, so we've got the market still for you. If you look at what's been described as the sell-off, as I heard from Temple, I showed you earlier about the equities market and a bit of sell-down also in the fixed income market. All of this going through basically through the I&E window, the investors and exporters window. Total turnover last week on this market rose 14.1%, and the figure was 1.13 billion US dollars. The upper week, the week before that, that figure was about 740 million US dollars. Last week, the total outflow in terms of I&E investors clearing a trade through that amounted to $1.13 billion. And that tells you that investors are taking their money out of this market. Almost 100% of the trades consummated within the I&E window of this $1.13 billion was done between 360 and 369 Naira to dollar relationship. That's the figure. So the Naira weakened against the dollar by 0.04%. At the I&E window, 362.78 when the market closed for the weekend on Friday. Was flat at the parallel market at 361 to the US dollars. Of course, you heard on Friday, Nigeria's FX reserves was down to 45.51 billion US dollars by almost 117.49 million. During the week, the central bank threw a lot of money into the market in terms of the FX, the regular FX interventions, and that was part of the story we're tracking for you this morning as well across all the markets as to start a new week when we have a number of economic stories and data to consider. Let's get back to Temple to give us a bit more icing, put more icing on the cake for the market there where he's standing. Temple, the insurance folks still remain in the news, and I'm sure this will be one story that everyone will still be focusing on this week. The news just came in that AICO has gotten a clearance or approval from NICOM to include agriculture in its basket of offerings of insurance policies. This is one good news for the agriculture sector.
Absolutely, absolutely. It is a good news for the company. AICO is one of the most active stocks by way of penny stock now in the market. You recall that a few years ago, they succeeded in getting a facility from a subsidiary of the World Bank, and that was to carry out a bit of expansion drive. And then last week, of course, we also heard of the news that in line with this regulation and reclassification demand from NICOM, AICO is also considering a private placement by way of meeting these demands. Now, this is coming in agriculture insurance. That is something that a lot of the insurance companies, as we know, are beginning to now put into consideration by way of expanding their operations to see how they could weather the storm and to be able to ease the pressure that this sort of reclassification and, of course, regulation from NICOM will bring about on their businesses as well as investors. Last week as well, we heard of the concerns from a whole lot of the shareholding community talking about the possible job losses that the insurance sector will be incurring as a result of this recapitalization and reclassification exercise. These are sort of things that board of directors in the insurance sector this morning will be considering. Interestingly, last week, you recall that a consolidated hallmark was also one of the major gainers in the market, I think by about 30% for week-to-date performance of that company. H Markings, as it is known by way of symbol on the NSE here, has also been able to double into travel insurance. This explains the level of diversification of operations that insurance companies are now beginning to consider, given this regulation that came into play. So we're going to be seeing a CI travel insurance now for Schengen visas, for passengers traveling to some of the most traveled, major destinations for Nigerians going forward. And we understand that there's a Japanese or Spanish company now that has now invested in H. Markins, that's Consolidated Hallmark Insurance. And this is one of the reasons, anyways, why the stock was able to move by the percentage we saw last week in the market. So this is what we're experiencing this time in the insurance sector. However, nothing ended up changing. If you look at the index of the insurance sector last week, it came in at just 0.06%. That is also because the market capitalization of a lot of these stocks is really, really low. So at the end of the day, by the time we're able to see mergers and acquisition, as we've seen in the case of Sunu Assurance, and of course, the kind of acquisition that Eaton is bringing to NEM Insurance, perhaps that sector will be jacked up in a way. Of course, NICOM is also seeing this exercise that the companies are going through right now, driving up performance in that sector. You know that a lot of them are now trading below 30 kobo. That's a lot of the insurance stocks in the market are trading below 30 kobo in the market. With all of these kind of activities, it is expected that things will grow in that market. They'll come up with a lot of products, and at the end of the day, they will be able to deliver, bonuses, dividends to investors, possibly in the long run. Bosun.
Tempo, thank you very much. We'll keep an eye on the insurance sector for this week. That's one big story with the deadline set for Friday by the NICOM chief, Mohammed Kari, here on Channels Television last week, that they will have on Friday the 14th to submit all their resolutions fully signed on by their bank, by their board of directors to describe or decide what insurance classes they will be playing in. That is set for Friday. We're also looking towards the NICOM making good its promise to publicize the new implementation guidelines for the new reclassification from today. So a very busy week for NICOM, and we'll keep an eye on that very well. But we have a lot of economic stories that has been making the headlines. This week is also important for inflation, which is always one of the kings in the economic room. Let's get to Bismarck Rewane, the CEO at Financial Derivatives Company and Channels Television economic counselor or consultant to weigh in on this. Good morning, Mr. Rewane. It's good to see you.
Good morning, Bosun.
Yeah, let's touch briefly on inflation. We've had a bit of a backlog of economic data. We have inflation coming forward, but we've had the August PMI, we have the business confidence report from the central bank, then of course we have the foreign trade data. So quite a lot on your table this morning. I'm pushing them to you.
Yeah. Well, we expect the inflation data to come out later this week, and our forecast is for 11.15. Some others have said to stay flat at 11.14. But it's all within the margin of error. But definitely speaking, we've got to the point of it's bottomed out and with point of inflection. This is consistent with what the IMF and all the other analysts are saying. The inflation is set to increase. Why? Because there are cost push factors, there are liquidity factors, and there's also constraints to power and some other output constraints. So essentially, expectations are that inflation will increase, but the only reason why inflation has not increased at this time is because there's been some credit restrictions that people are, the high interest rate environment has made people actually begin to bring down prices so as to gain market share. So for example, on the 4th of June, there was an excise duty increase on beer and brewed products. It went up by 10%. Prices of all the beer products went up on 4th of June. And South African breweries did not respond, even though Heineken and Guinness increased their prices. So what happened? September 1st, all the prices were brought back to where they were before. So we've seen that price increase. We've seen flour increase because of up to 11,100. But generally speaking, because the food basket is so critical at this time, and this is the harvest season, we are beginning to see a slow increase in price and resistance. But all of this because we expected the minimum wage review, we expected some other increases in salaries, but that hasn't happened. So rather than have a steep increase in the price level, we are seeing a flat or slow increase in prices. What does this mean? It means that the central bank, in dealing with its Monetary Policy Committee on the 24th and 25th of this month, will have to consider one, slow growth of GDP, which is a reason why you should bring down interest rates, or creeping fears of inflation, a reason why you should increase interest rates, and then the debt service burden of government. All of this put together, we think that it's going to be a very interesting meeting, but most likely we maintain the status quo again.
Mr. Rewane, do you see the PMI August numbers as indication that the economy is on a cusp of some recovery away from the second quarter slowdown in the overhead or the overall GDP reading?
No, it's not. Don't be deceived by those numbers. Those numbers increase because this is a time cyclically that you begin to build up your inventory for the Christmas sales. And also, this is a different Christmas because this is going to coincide with the electoral season. So many people are saying, well, three things. One, let me order my goods for Christmas. Two, let me order enough goods to carry me through the electoral season just in case there's some difficulty. And thirdly, there's beginning to be fear of currency pressures. As you know, in the IE window on Friday and Thursday, exporters were selling forwards at 364.50. So the consensus is that the currency will come under pressure, even though the central bank will try to defend the currency. But to hedge against this, people are now buying forward and closing all their transactions so that by the time we get to November and December, when there'll be Christmas and the politicking, all of these guys will have their inventory in. So the inventory build of the PMI, which you have seen now, is more of a hedge against political uncertainty and weakness of the currency rather than a symptom of growth.
Where does that leave the man on the street?
Well, the man on the street, let's face it, he's better off this year than he was last year, and he's better off this year than he was 2 years ago. But he's not as well off as he should have been if things were done properly at the right time. But, you know, we are where we are. We need to build up around it. There's going to be a lot of spending. There's going to be election spending. There are social intervention programs. Inflation has come down 18 consecutive months. So it's not that bad. The real number that we're waiting for is the unemployment number that will come out in November. If that unemployment number spikes much faster than the rate at which inflation has come down, then we have a problem. Our misery index will be higher, and this is what, you know, nobody's looking forward to at all.
Yeah, but we've all been looking forward to the unemployment report. The last we had was for third quarter last year. Why is it going to take 12 months to have another one?
No, it's more than 12 months because we are going into the fourth quarter. So I understand there were some budget constraints. I understand that work is going on. But, you know, the thing is that it's best we release the numbers after all the primaries and all the political infighting. Let's release it when it cannot be used for political grandstanding and all of that. So we look at the numbers, we do justice to it, and then we take steps to ensure that we can deal with unemployment. Unemployment is a big problem in most emerging markets, and more so in Nigeria at this time.
Mr. Rewane, we have quite a few more questions for you. You've got to stick around till after the break. We're just scratching the surface. The second quarter trade balance report, or what you call the foreign trade report, is still one big elephant in the room that we were trying to fix. So we know you're very busy. It's Monday morning with a number of meetings you're going in and out of. So please bear with us. 2 minutes. We will be back from break. Then we will reconnect with you, just standing there with the connection, as it were. Bismarck Rewane, the CEO at Financial Derivatives Company. We've been trying to unpack some of the recent economic data, first with the GDP, then we have inflation outlook. We had July behind us. We're looking at August this week. Then, of course, we just touched on PMI. But all this is a big story, or two others, relate to the business confidence report, what we call the expectation survey from the central bank, which came out late last week, and, of course, the trade balance report. Let's keep all of that till we come back.